Well, U.S. natural gas futures are pushing higher on Wednesday, standing out like a black sheep in an otherwise red energy market. While most energy commodities are under pressure, gas is carving out its own path, bolstered by a fresh wave of colder weather expectations and growing anticipation ahead of what could be the season's first storage withdrawal in tomorrow's EIA report. After rebounding from Tuesday's short-term dip, the December NYMEX contract carried that momentum into Wednesday's session. Prices climbed with conviction, holding well above the 200-day moving average at $4.45, a pivotal technical marker that has now shifted from resistance to a firm layer of support. Traders are steadily factoring in a sharper turn toward colder weather from November 27, with the chill expected to take aim at much of the central and eastern United States. This shift in the short-range forecasts has breathed new life into bullish sentiment, reversing the softer tone that dominated earlier in the week. While some moderation is already showing up in the longer-range models for early December, many traders seem content to brush off that warmer turn and instead double down on the late November chill. The focus has shifted almost entirely to the expectation of the season's first storage withdrawal, even though early estimates in the 12 to 18 billion cubic feet range are modest and arguably already baked into the market. This selective attention is reviving bullish momentum for now, but it also leaves the rally looking increasingly vulnerable if the early December warmth becomes harder to ignore. Meanwhile, the underlying supply-demand balance remains decidedly bearish. U.S. dry gas production is still running hot, climbing to 108.7 billion cubic feet per day on Tuesday, a hefty 5.8% increase from a year ago, with drilling activity hovering near two-year highs. Demand is firming, but at roughly 87.3 billion cubic feet per day it still lags well behind the surge in supply, underscoring how loose the market remains despite the current weather-driven optimism. From a technical standpoint, natural gas is in a strong bullish position. It is above key averages with trend strength confirmed. However, overbought signals mean that while further upside is possible, a pause or modest correction is also quite plausible if the price struggles to clear resistance. Support levels to watch are around $4.45, which corresponds to the 200-day moving average, and a deeper support zone between $4.20 and $4.30 if the price loses momentum. Resistance levels to watch are around $4.70, which is the next major upside target, and if momentum is strong, a move toward 4.90 or higher becomes possible. Momentum indicators show the RSI is elevated, suggesting the market may be overbought, and other oscillators indicate caution due to overbought conditions. Short-term probability outlook is about a 40% chance of a rally toward $4.70, which would extend the uptrend, approximately a 50% chance of consolidation between $4.30 and $4.60 as the market digests the rally, and roughly a 10% chance of a pullback toward $4.30 or $4.20 should momentum falter or traders take profits. Feel free to buy me a coffee or YouTube super thanks if you'd like to help keep this channel going. Thanks for being here and I'll see you in the next one.